Many folks consider debt a financial burden, and it really can be. But here's what's happening. The rich are making more money with debts. Here's how. The general belief is that debt is that one thing everyone should try very hard to avoid. Some people wouldn't mind working an entire year to save up for a car, rather than take out a car loan. A number of you watching probably fall into this bracket. But you might be doing yourself a disservice by totally avoiding loans. There's a high chance you're jeopardizing your chances of financial freedom just because you don't want to borrow funds and be in debt. So, let's look at the positive side of debt and see how it can help you gain financial success. According to several billionaires, there are a bunch of important factors you need to consider before taking out a loan. The first is a solid financial plan. You must have a clear understanding of your financial goals. You can't just borrow money without having a solid plan on how it should be spent or invested. So, you need a budget that outlines your income and expenses, and a strategy for how you can achieve your financial goal through debt. Perhaps you want to start a business or even invest in that of a friend. It is important that you carefully define your financial structure and see how a loan can make things better. Having a solid financial plan also means having plans for an emergency fund to deal with any unexpected expenses, and even plans to pay off any high-interest debts before taking out any other loans. When this is done, it's time to start the research process. Before taking out a loan or acquiring debt, you have to properly analyze the terms of the debt. Consider the interest rates, fees, and any other factors that can impact the total cost of the debt before making a choice. Here's an interesting fact. You do not have to copy somebody else's loan plan just because it worked for them. You're in the best position to make a decision regarding your finances. You know what you're capable of and what would suit you best. So don't just copy other people's choices because it worked for them. Take the time to do your own research. After properly weighing your options and coming to a conclusion, so how to get started? A number of entrepreneurs take out loans to build their businesses, only to end up in an endless loop of high-interest debts. But rather than trying to find a well-paying business idea, here's one for you. It's common knowledge that China is the top manufacturing country in the world. Every human alive has probably seen a product labeled Made in China. These guys produce everything and anything. So what business owners do is they travel to China and make contact with a particular company that produces the goods they intend to sell, especially a product that sells really fast. Let's say a fancy tumbler, for example. Then they would buy a considerable amount and return to their country to sell it. Once that's done, they'll reach out to the company to order some more. After buying a few times and gaining the trust of the manufacturers, these business owners would urge the company to loan them some goods with the promise of paying back once it's sold. Most manufacturers agree once they trust you because it's a win-win for both parties. The manufacturer gets to sell their product and you get to earn profits without investing your personal funds. The best part is that there are no ridiculous interest rates. You just have to pay for the goods. So you can see how possible it is to make money through debts. Another very good method of earning through debt is by taking out a mortgage. Hold up a little bit. Doesn't that sound self-contradictory? Most people are trying to get out of mortgage payments. So how can we earn through mortgages? Let me let you in on a little secret. Many wealthy people take out several mortgages because it would allow them to pay less taxes. So those extra dollars you ought to pay as taxes could be used for other purposes. But that's just by the way. As a business-savvy individual, a very smart move is taking out a mortgage to buy a property you could easily rent out. You'll visit the bank like every other person, pay the 20% down payment, and then get the mortgage to buy a house. You also should make sure that the mortgage you take out covers renovations and developments of your new property. So if the building needs a little renovation, you can have the cash to fix it. Once everything is in place, rent it out at a very reasonable price. This might take a while, but you should be able to comfortably pay back the loan while enjoying immense profit. At this point, if you're still not convinced that debts could lead to financial freedom, keep watching till the end. The last method will change your mind. Another very good way to use debts to create wealth is by investing in stocks. We all know how good it is to invest, but you might be surprised to find out that you could take out a loan to invest. For you to get high returns after investing, you have to invest a lot of money, and this is almost impossible if you don't have the funds to actually begin investing. So, a very smart decision is to take out a loan and invest it in a reputable and profitable company by buying their shares in the stock market. However, it's important that you take out a long-term loan so your investment can take time to mature. At this point, it's also important to look out for high-quality stocks. Not only do these stocks have a very strong potential for growth, you can earn in the short term through companies like this because they are constantly growing. But you must also know that this method comes with risks, and you need to have a good understanding of the stock market before investing in it. If you make a wrong move, you might end up with a debt too huge to pay back. You can also use your debts to achieve financial freedom through Forex. The foreign exchange market is a market where currencies are traded. It's this market that makes international trade possible, and it determines the value of a country's currency against that of another country. For instance, when you travel to another country and your currency gets exchanged, it's the Forex market that determines the rate at which it would be exchanged. But how can you earn money through this? For starters, you could get involved in Forex trade. But to make a lot of money, you will need to be able to predict which currency will rise or fall. But what makes this market a very good one is that for every dollar you trade with, you can borrow an extra $100. This means if you put in your own $500, you could trade with as much as $50,000 in the market. But just like any other market, the foreign exchange market can get very volatile and unpredictable. So it's important that you study the market extensively before you make an investment. Next up, an unconventional approach. Hedge funds are created by wealthy people to make them wealthier through legal but unconventional methods. Usually, we always try to predict which companies we expect to grow based on their current performance and future projects. Then we buy their stocks with the belief that its value will improve in the next few months or years. But here, we use an entirely different strategy, and it mostly revolves around making money when a company's value drops or they go bankrupt. So how do you make money in the opposite direction with debts? For instance, you believe that Instagram's stock will decline because Samsung would put certain restrictions on the app, which in turn would damage the business model. So you immediately reach out to your broker to lend you a single Instagram stock that costs about $150. Then right after, you put it up for sale in the open market. Since you borrowed the stock from your broker, you'd have to pay it back. And if your prediction is right, the cost of the Instagram stock might drop to $100. This is the amount you'd pay to your broker. And it also means you now have $50 in your pocket, based on a simple prediction. But this is really not as easy as it sounds. Any wrong prediction, and you might just be in trouble. So there's a need to emphasize that intensive research needs to be carried out before you commit to any of the methods I've shared. This is because of the high risk that comes with each method. Thanks for watching, and we'll see you in the next video.